Social Security is sending out payments in 2026. And if you receive benefits, there are things you need to know right now about your payment amount, your payment date, and a few steps you should take this week to make sure everything is correct on your account. Let's start with the two numbers you've probably already heard about: $1,800 and $2,400. These are not random figures. They come directly from the Social Security Administration's published benefit data for 2026, and understanding what they mean for your specific situation is exactly what we're going to walk through today. A lot of people hear these numbers and assume one of them automatically applies to them without ever checking whether that's actually true. That assumption costs people money every single month, and by the time you finish reading this, you'll know exactly how to find your real number, what it's based on, and whether you're collecting everything you're entitled to. Every January, the SSA updates benefit payments through something called the Cost of Living Adjustment, or COLA. This is not a new program. You don't need to sign up for it. It's an automatic annual update applied to every Social Security benefit: retirement, disability, survivor benefits, and SSI, all at once. The purpose is straightforward. As the cost of everyday goods and services changes over time, your benefit is adjusted to reflect that. The SSA calculates this using the Consumer Price Index for urban wage earners and clerical workers, published by the Bureau of Labor Statistics. That data drives the number. For 2026, that adjustment has already been applied across all benefit categories. What a lot of recipients don't realize is that the COLA affects everyone differently in terms of the actual dollar increase. Because the adjustment is applied as a percentage to your existing base benefit, someone receiving a higher monthly amount sees a larger dollar increase than someone receiving a lower amount. The percentage is the same across the board, but the real-world impact in dollars varies. This is why two people can receive the same COLA percentage and walk away with meaningfully different increases in their actual monthly deposits. If you've been comparing your increase to someone else's and wondering why the numbers don't match, this is the explanation. If you haven't logged into your My Social Security account at ssa.gov recently, there's a good chance you don't know your exact updated amount for this year. We'll come back to that. Now, the $2,400 figure. According to the SSA's own published benefit statistics, the average monthly retirement benefit for a retired worker after the 2026 COLA adjustment lands at approximately $12,400. This is the average, meaning it reflects the midpoint across all retired workers who claimed at or near their full retirement age with a reasonably consistent work history. Your individual benefit is calculated differently. The SSA uses your 35 highest earning years, adjusting each one for wage growth over time, and builds your benefit from that. The result is called your primary insurance amount, or PIA, and your monthly check is derived from that figure. A few things directly affect where your benefit lands. If you worked fewer than 35 years, the SSA fills in zeros for the missing years. 7 missing years means 7 zeros averaged into your calculation, and that pulls the monthly amount down. Your lifetime earnings level matters too. Higher average earnings over your career produce a higher benefit, and your claiming age has a permanent effect, which is where the $1,800 figure comes in. Something worth understanding here is the concept of delayed retirement credits. Just as claiming early reduces your benefit permanently, delaying your claim beyond full retirement age actually increases it. For every year you delay past full retirement age, up to age 70, your benefit grows by approximately 8% per year. That means someone who delays from 67 to 70 receives a benefit roughly 24% higher than what they would have received at full retirement age. This is not a widely understood option, and for people who are still working and don't need the income immediately, it represents a meaningful long-term financial decision. The math only works in your favor if you live long enough to recover the payments you delayed, but for people in good health, the numbers often support waiting. If you're approaching retirement age and haven't run this calculation yet, your My Social Security account at ssa.gov includes a tool that lets you compare estimated benefit amounts at different claiming ages side by side. The full retirement age for anyone born in 1960 or later is 67. That is the age at which you receive your complete calculated benefit with no reductions. The SSA does allow you to start collecting as early as 62, but claiming before 67 results in a permanent reduction. Claiming at 62 can reduce your monthly benefit by up to 30% compared to what you'd receive at full retirement age. Claiming at 63 or 64 reduces it by a smaller amount, but any early claiming produces some level of permanent downward adjustment. And this part is important. That reduction does not reverse when you turn 67. It stays built into your monthly payment permanently. Future COLA adjustments are then applied to that already reduced base, so the gap between early claimers and full retirement age claimers continues to grow slightly every year in actual dollar terms. That dynamic is the primary reason a large number of recipients find their 2026 benefit in the $1,800 range rather than at the $2,400 average. The $1,800 range also covers many SSI recipients. Supplemental Security Income is a separate program from Social Security retirement. Retirement benefits are earned through your work history and payroll tax contributions. SSI is a needs-based program for people 65 and older, individuals who are blind, and people with qualifying disabilities who have limited income and limited resources. The maximum federal SSI payment for 2026 is $967 per month for an individual. The $1,800 range also includes many survivors receiving benefits based on a deceased spouse's or parent's earnings record and dependents collecting under another person's Social Security account. It's also worth understanding that for people who receive both SSI and Social Security retirement benefits simultaneously, the two payments are calculated and paid separately, and the amounts interact with each other in a specific way. Your Social Security retirement benefit is counted as income for SSI purposes, which means it can reduce your SSI payment dollar for dollar above a certain threshold. The SSA applies a formula to determine what your combined total ends up being, and the result is that most people receiving both don't simply add both maximum amounts together. If you receive both types of benefits and you're unclear on how your total is being calculated, a call to the SSA helpline can walk you through the exact math applied to your specific case. Now let's talk about when your money arrives. The SSA uses a birthday-based payment schedule for retirement benefits. If your birthday falls between the 1st and the 10th of any month, your payment arrives on the second Wednesday of that month. If your birthday falls between the 11th and the 20th, it arrives on the third Wednesday. If your birthday falls between the 21st and the 31st, it arrives on the fourth Wednesday. There is one exception that applies to a significant number of people. If you began receiving Social Security before May 1997, or if you receive both Social Security retirement and SSI at the same time, your Social Security payment arrives on the 3rd of each month, and your SSI payment arrives on the 1st. When a scheduled payment date falls on a weekend or federal holiday, the SSA moves the payment forward to the nearest business day before that date. This is a standard, documented practice. When people mention receiving an early payment, this is almost always what happened. Not an extra payment, not a special release. Just the SSA adjusting for a non-business day. It is fully described in the SSA's published payment schedule at ssa.gov. Give your bank 1 to 3 business days to fully process a deposit after the SSA releases it. A payment sent on Wednesday may not show as available in your account until Thursday or Friday, depending on your institution. This is a banking processing timeline, not an SSA delay. If your payment hasn't shown up within 3 business days of your scheduled date, that is the point at which it makes sense to contact the SSA directly rather than waiting further. One thing that trips up a lot of recipients is the difference between a payment being released and a payment being available. The SSA releases funds on the scheduled date, but your bank controls when those funds are accessible to you. Different financial institutions have different processing timelines for government deposits. Some banks make federal direct deposits available immediately upon receipt. Others hold them for 1 business day as part of standard processing. If you consistently find that your Social Security deposit appears a day later than expected, the issue is almost certainly your bank's processing time rather than anything related to your account at the SSA. Switching to a bank or credit union that offers immediate availability on government deposits is an option worth considering if the current delay causes you budgeting difficulties each month. Another option worth knowing about is the Direct Express prepaid debit card program. This is a federally managed card specifically designed for Social Security and SSI recipients who either don't have a traditional bank account or prefer not to use one for their benefit deposits. Payments are deposited directly onto the card on your scheduled payment date, and the card can be used anywhere that accepts debit payments. There are no monthly fees for receiving your Social Security or SSI deposit onto the card, and the program is administered under federal oversight. If you currently receive a paper check and want to move to electronic payment without opening a traditional bank account, the Direct Express card is the official alternative. You can enroll by calling 1-800-333-1795 or by contacting the SSA directly. If you receive SSI, your state of residence affects your total monthly benefit in a way that matters. The federal government sets the baseline SSI payment, but the majority of states add a state supplemental payment on top of that. The difference can be hundreds of dollars per month. California and New York both provide significant state supplements. Alaska ranks among the highest in total SSI benefit when state and federal amounts are combined due to the cost of living there. On the other hand, states including Texas, Georgia, and Mississippi do not currently provide any state supplement, meaning SSI recipients there receive only the federal amount. In some states, including California and New York, the state supplement is administered through a state agency rather than through the SSA, so you may receive 2 separate deposits each month from 2 different sources. If you're an SSI recipient in one of those states and you're only seeing one deposit, contact your state social services office to find out whether you're missing the second payment. If you've never confirmed whether your state provides a supplement, search your state name alongside SSI State Supplement 2026 or call the SSA helpline at 1-800-772-1213 and ask directly whether you're receiving the maximum total benefit available to you in your state. Something else worth knowing for SSI recipients specifically is that the resource and income limits for SSI eligibility have been a topic of ongoing policy discussion. The general asset limits that determine whether someone qualifies for SSI have remained relatively unchanged for decades, while the cost of living has risen substantially. This means some people who might genuinely need assistance don't qualify simply because the resource threshold hasn't kept pace with actual economic realities. If you're currently receiving SSI and your financial situation has changed, either your income has decreased or your resources have shifted, it's worth contacting the SSA to make sure your eligibility determination and benefit calculation still accurately reflect your current circumstances. Changes in living arrangements, household composition, or income sources can all affect your SSI amount, and the SSA needs to be informed of those changes in a timely manner. There are also 3 things many recipients qualify for but never pursue. The first is a formal earnings record review. Your benefit is calculated from your earnings record, which is built from decades of employer tax filings and your own tax returns. Errors do occur. Missing years, incorrect figures. Because your benefit uses your 35 highest earning years, a single missing high income year can reduce your monthly amount going forward. You have the right to request a formal review of your record. If a correction is confirmed, the SSA adjusts your benefit. It costs nothing and can be initiated through your My Social Security account or by phone. This is particularly important for people who worked multiple jobs simultaneously, worked for employers who went out of business, or spent time as self-employed workers. Self-employment income reporting has historically produced more errors in earnings records than traditional W-2 employment, partly because self-employed individuals are responsible for their own tax filings, and any errors there flow directly into the earnings record. If you spent any portion of your career self-employed and you've never done a detailed review of your earnings record, doing so now could reveal discrepancies that are worth correcting before they compound further. The second is something that surprises a lot of people. Once you've reached your full retirement age, you can earn any amount of income from work without any reduction to your Social Security benefit. Before full retirement age, the SSA applies an earnings test that can temporarily reduce benefits if you earn above a certain threshold. But once you pass full retirement age, that test no longer applies. If you've been holding off on claiming because you're still working, confirm your full retirement age and verify whether that concern still applies to your situation. It's also worth knowing that if the earnings test did reduce your benefit in years before you reached full retirement age, the SSA actually recalculates your benefit at full retirement age to give you credit for those withheld months. So the money withheld during those early working years is not permanently lost. It comes back to you in the form of a slightly higher monthly payment once you reach full retirement age. Many recipients don't know this, which means some people are currently receiving a monthly amount that doesn't account for this recalculation correctly. Checking your benefit statement after reaching full retirement age to confirm this adjustment was applied is a worthwhile step. The third is spousal and survivor benefits. If you're married, were married for at least 10 years before a divorce, or were married to a spouse who has passed away, you may be entitled to benefits that exceed what your own earnings record produces. Spousal benefits can reach up to 50% of your living spouse's full retirement benefit. Survivor benefits for widows and widowers can reach up to 100% of what the deceased spouse was receiving. Many people are collecting based only on their own record when they're legally entitled to a higher amount. A single call to the SSA at 1-800-772-1213 asking a representative to review both your own record and any spousal or survivor benefit entitlement you may have is worth making. One detail regarding divorced spouse benefits that many people are unaware of: claiming a divorced spouse benefit does not affect the benefit your ex-spouse receives in any way. The SSA pays your divorced spouse benefit entirely separately, and your ex-spouse's monthly amount is completely unaffected. There is no financial reason for your ex-spouse to be informed of or involved in your claim. People sometimes avoid pursuing this benefit out of concern that it will create a conflict or reduce the other person's payment, but that is simply not how the program works. There is also a lesser-known provision called the Government Pension Offset, or GPO, and the Windfall Elimination Provision, or WEP, that affects certain recipients who worked in jobs not covered by Social Security, such as some state and local government positions, while also having Social Security eligible work history. These provisions can reduce spousal, survivor, or even your own retirement benefit if they apply to your situation. If you spent any part of your career working for a government employer where Social Security taxes were not withheld from your paycheck, it is worth asking the SSA specifically whether the GPO or WEP applies to your benefit calculation. Both provisions have been subject to legislative discussion in recent years, and changes to either one could affect the monthly amount you receive going forward. Staying informed about your specific situation is the only way to know whether any changes impact you. On the topic of fraud, whenever Social Security information circulates widely, scammers take advantage of the attention. A few things to know clearly. The SSA will never call you unsolicited and ask you to confirm or provide your Social Security number over the phone. They already have it. Anyone who calls asking for it is not from the SSA. The SSA will never ask you to pay anything using gift cards, wire transfers, prepaid debit cards, or cryptocurrency, for any reason, under any circumstances. There is no special enrollment required to receive your 2026 payments and no fee to unlock a higher benefit. The only official website for Social Security information is ssa.gov, not any variation, imitation, or alternate domain. One of the more sophisticated scams currently targeting Social Security recipients involves callers who already have partial personal information: your name, your general location, sometimes even the last 4 digits of your Social Security number. They use this information to appear credible and build trust before asking for the remaining details or for a payment. Having some of your information is not proof that a caller is legitimate. The SSA will not call you out of the blue to discuss your account, request verification of personal details, or inform you of a problem that requires immediate action over the phone. If you receive a call like that, hang up, and if you want to verify whether there's actually an issue with your account, call the SSA directly at the official number or log into your account at ssa.gov yourself. 3 things worth doing this week. First, log into your My Social Security account at ssa.gov and confirm your 2026 benefit amount. Your account shows your confirmed monthly payment after the COLA adjustment, your full earnings record, and your payment history. If the number looks off, document it and contact the SSA directly. Second, if you receive SSI, confirm whether your state provides a supplement and whether you're receiving it. Third, verify your direct deposit information and mailing address are current inside your My Social Security account. If you've moved, changed banks, or opened a new account in the last year without updating the SSA, your payment could be delayed. This takes under 5 minutes and prevents problems that can otherwise take weeks to sort out. One additional step that doesn't get mentioned often enough: review the beneficiary and representative payee information on your account if applicable. If you have a representative payee set up to manage your benefits, confirm that the person or organization listed is still the correct one and that their contact and banking information is current. Outdated representative payee information is a less common but very real source of payment delays and misdirected deposits that can be difficult to untangle once they occur. If you've recently gone through a major life change, a move, a marriage, a divorce, the passing of a spouse, or a significant change in your health or work status, those are all events that can affect your Social Security or SSI benefit, and that the SSA needs to be informed about in a timely manner. Failing to report a relevant life change doesn't just risk your benefit amount being incorrect going forward. In some cases, it can result in an overpayment that the SSA will later seek to recover, which creates a much larger and more stressful problem than simply reporting the change when it happens. When in doubt about whether something is reportable, call the SSA and ask. That one phone call is far simpler than dealing with an overpayment notice months later. Everything covered here comes from publicly available SSA data and the Senior Support USA published benefit information for 2026. Your benefits exist because you earned them through years of work and payroll contributions made with the understanding that this system would be there when you needed it. Making sure you're receiving the correct amount on the correct date with full awareness of every option available to you is simply a matter of knowing where to look. Pass this along to someone in your life who could use it: a neighbor, a family member, a friend who has been uncertain about their payment or confused about what they're owed. One conversation based on accurate information can make a real difference in someone's monthly income and their confidence in a system they spent a lifetime paying into.